On everybody, thank you so much for checking in. In this video, we're going to go over SPY, which is the S&P 500 ETF, and we're also going to cover some other notable names on the market, such as Tesla, Apple, AMD, Nvidia, Meta, and Amazon. We're going to talk about these stocks on the macro and the micro time frame. That way we get an idea of what they're doing on the overall picture and what they're doing on the day-to-day. But before we jump into our charts and talk about some price targets, let's talk about some key economic reports that are happening this week that may influence markets to move back up or force them to test last week's lows. First and foremost, the most important economic report to watch for this week is going to be the Consumer Price Index, which will update consumers on inflation and give us an idea if inflation is coming down lower or it's still sticking around that 3% mark. You can see that ever since inflation reached that 3% mark in June 2023, it has been reluctant to come down below 3%. Now, if you've been paying attention, the Federal Reserve has been wanting inflation to come down to 2% before they begin cutting rates. Inflation at 2% would mean that everything is restored back to where it was before COVID, and it means the Federal Reserve can finally loosen up their economic policy. Now, other than the Consumer Price Index, we have the Producer Price Index, which is also going to update us on inflation. However, it will update us on inflation from the producer or the manufacturer's side. That has also ticked up and has remained a little bit reluctant and sticky over the last few months. So we want to see that number come down, and we most importantly want to see that number on the CPI report come down closer to 2%. If this number goes up or it stays flat, then it may scare markets. And the reason why is because when we saw that sell-off last week, which came on Thursday, that came after the Federal Reserve members, in specific member Kashkari, he's the one that stated that he doesn't even see interest rate cuts happening this year. This is the first time that the market has heard this, and it obviously scared them. Ever since the start of this rally back in October, this entire rally has been built on the fact that the market is expecting at least 2 interest rate cuts this year. We were supposed to get a rate cut in March. We didn't. We were supposed to get a rate cut in June, and that has dropped to the odds of about 50%. So obviously, with all that in mind, and given the fact that we have built this entire rally based on that interest rate cut, the moment the market heard that there may not be an interest rate cut, we saw that dramatic sell-off and it took us lower. Now, where do we go from here? Obviously, we already mentioned that we need to pay attention to what's happening with the Consumer Price Index this week. This is coming out on Wednesday before market open. This is 8:30 a.m. Eastern, which means that if you are taking any position on Monday and Tuesday, you have to keep that in mind because the Consumer Price Index has historically moved markets significantly higher or significantly lower ahead of the open, so you may not have a chance to manage your position by the time that the market has opened after the Consumer Price Index is released. And that goes the same for the Producer Price Index, which has historically also moved markets. Now, last week, we saw multiple Fed members speak, and you obviously saw the influence that a single Fed member has. This week is also filled with more Federal Reserve members speaking, so make sure you pay attention to what everybody is saying. If you can't catch the full meeting, at least read the headlines. That way we get an idea of where the Federal Reserve is at and what they're thinking. The Feds are going to be one of the biggest influencers to the market, so you have to pay attention closely. Now, moving on to our charts and talking about SPY in specific, we have to see and we have to point out, first things first, that SPY broke below the 10 and 20-day moving averages last week. The 10, 20, 50, 100, and 200-day moving averages are all moving averages used by institutional traders and investors to gauge in what kind of trend is the current stock that you're looking at in. Ever since we broke back above those lines back in October and November of last year, you can see that we have been rallying and the market has not once given up that support. Anytime it broke below the 10 and 20, you can see it circled right back up and continued pushing higher because the buyers and the bulls have been so strong. However, last week, and clearly we can see that this is the biggest sell-off day we have had ever since the start of this rally. We haven't seen a sell-off day this strong probably since before our reversal, and you can clearly see that that sell-off came with a ton of selling volume, and it also created what we call a bearish engulfing on the daily chart. Now, with all that being said, although we bounced on Friday, it doesn't necessarily mean we're back in safe territory yet. If you are watching the daily chart in specific, you need to make sure that the daily candle ends the day or opens the day back above the 10 and 20-day moving averages for buyers to restore any kind of confidence, kind of like what happened here. You can see that we broke below them, but buyers came back and restored the trend and continued moving us higher. That is something that we want to see. However, we won't be so quick to trust it only because we saw such a strong sell day, and that could be a forewarning to a full-on reversal or potentially a long bearish consolidation period. Now, if you are looking at SPY on the shorter term time frame and you're not only focused on the daily time frame, let's talk about some levels. We have a support placed at 512.40 to start us off. And the reason we have that support is because that was the lowest point we reached on Thursday before bouncing back on Friday. So buyers need to defend that level coming into this week in order for them to avoid a further sell-off. You can see that we have been trending up since about this gap up that we saw a few weeks ago. We have been doing a good job at defending this trend line. We tried to break below it on Thursday, but buyers came back on Friday and rescued it. So make sure you also have this trend line placed on your chart, because if we dip below it, we may do something like this. We may come down in such a way in which we see the market do something like, let's go ahead and pull up this trend line. We may see the market do something like this. It may come up, it may come down, it may come up, and it may come down, and it may continue coming down. Or we may see the market do something like this. We may see the market go up, come down, bounce, and keep continuing going up. Remember, the market is still very much in a very strong bullish trend. Yes, Thursday and Friday were a sign that this trend may be broken soon, but we can still recover very easily on the slightest bit of positive news. Don't forget that another huge influence right now on the market is going to be the war or the geopolitical tensions happening between Russia and Ukraine, and of course what's happening in the Middle East. What we're going to see this week is going to be the Consumer Sentiment Index. That will give us an idea on if consumers are feeling a little anxious about what's happening geopolitically or not. Consumer sentiment has generally been trending up. Yes, it pulled back from month over month between January and February, but nonetheless, it is doing significantly better than June of last year when we hit about 50 on the lows. I'm sorry, June 2022. All right, so on SPY, if we do break below that 512.40 mark, we have another support at 507.70, and we have a support at 503. But quite honestly, this support at 503 is not that strong. And if we break below it, then we don't really have much support till about 493. Now, we're not saying that we will hit 493 this week specifically. That is a very aggressive price target, but it is definitely a doable target considering how fast markets move on Thursday of last week. Make sure you guys are checking back in because we are updating these levels on a weekly basis. Now, moving on to the next stock on our watch list is going to be Tesla. Tesla is by far one of the weakest companies on the market right now, and we saw it once again move lower last week, closing in on its 52-week lows. Now, we as a group caught Tesla puts last week. We caught it on this move down. On Friday, we were able to catch it right here and sell it down here. Our target was around 160, which it hit our target, and we were able to close at more than 100% on our puts. Now, is there going to be another chance to trade Tesla this week to the downside or the upside? Let's go ahead and discuss it. First things first, let's pull up Tesla on the daily, which you can see that unlike SPY and unlike Nvidia and companies of that strength, Tesla has been trading below all of its healthy moving averages. And that's kind of a red flag. If a stock is trading below all of its healthy moving averages, then that means that sellers or the bears are in control in this case. So if you are looking at Tesla, the first and last thing you want to pay attention to on every single day, you want to pull up that daily candle and see where it closed in relation to that 10 and 20-day moving averages. It has tried its hand to move back above them, but you can see that as soon as it moved back below, it continued its trend lower. On Tesla's shorter term time frame, let's go ahead and pull that up. We've already got it planned out for you. You have a resistance at 177.17 to pay attention to, and you have another resistance at 184.25. As long as the stock is below those levels, then we are very, very much bearish on the stock. You can see that the stock has been rejected at that 184 mark once, twice, and 3 times, making that a triple top pattern, which is a very bearish pattern to watch on the market. Now, last week's lows moved to around 160 before the stock saw any kind of bounce, which means that 160 is the primary support you want to pay attention to coming into this week. If it breaks below those lows, then those sellers are going to be pretty much very active, and they're likely going to take it to its next support of around 152. Now, if the stock moves back above 184.25, yes, it can move towards 205, and it may follow this trend line perfectly. The stock may want to move its way all the way up to 226. So just because the stock is very bearish right now, it doesn't mean that it can reverse that trend. So keep an open mind when you're trading markets. If you're investing, you want to be very much committed to that investment strategy. But when you're trading, you want to have an open mind, because reversals can happen at unexpected times, even when they don't go according to plan. Now, the next stock on our watch list is going to be Apple. Like Tesla, Apple is also one of the weaker names on the market. And you can clearly see that despite the fact that the market has rallied through the most of the 12 months that we've seen, Apple has lagged behind, and it is now trading near those 52-week lows, and it is likely going to come down lower. Apple is struggling for innovation right now. The Apple Vision Pro was not good enough. They recently dropped their plans on the EV car, and now they just announced that they are going into robotics, which is not what the market wanted to hear. The market wanted to hear something related to artificial intelligence, and Apple is simply not bringing that to the table. Are we bearish on Apple in the long term? No, we still think the stock is very dominant and it will likely come around. However, for the short term, markets aren't too excited about Apple, and that likely means that Apple is going to continue its descent. Now, if you are bullish on Apple, you need the stock to move back above 182.50 in order for it to regain some kind of strength and some kind of confidence. But for now, Apple is mostly bearish, and we are very much bearish as long as it remains below 173.70. You can see that the stock has broken below its uptrend. This is a very significant uptrend that it has used over the months, and it broke below it, came back to retest it, this trend line, and it got rejected, which means that sellers are in control. Now, the first support you want to pay attention to this week is going to be Apple's lows of last week, which is going to be right around 168.23. So you have that 168.23 support to first focus on. Buyers are going to need to defend this support to avoid a further sell-off towards 164.20, and then the second price target below that is going to be around 159.70. Remember that Apple is one of the strongest and biggest companies on the market, and so if Apple is selling off, there's a good chance that the rest of the market might follow. The next stock on our watch list is going to be AMD. Now, AMD really psyched the buyers out last week. You can see that it looked beautiful. The stock was making higher highs, and it tried to break out on Thursday, but unfortunately, the moment it opened, it began this deep sell-off and continued coming down. If you caught puts on that trade, you made a ton of money. We didn't catch puts on AMD, but we did definitely catch puts on the rest of the market. And by the way, if you guys are interested in getting our daily setups, we are leaving a link in the description. We are sending daily setups on options, stocks, long-term and short-term. They're absolutely phenomenal. You get everything for one price. It's pretty awesome. For AMD in specific, let's go ahead and pull up AMD's daily chart, where you can see that AMD last week, for the first time in months, came down below its 50-day moving average, and it came down significantly, also forming a bearish engulfing, which was the same thing that we saw on SPY, which is another bearish signal for us to note down. The market isn't fully bearish yet, but it is definitely giving us some warning signs. Let's say something about this 50-day moving average, which is this yellow line right here. This yellow line is by far, out of the 10, 20, 50, 100, and 200-day moving averages, the 50-day moving average in specific is one of those moving averages that institutional traders watch very closely to determine if a stock is currently mostly controlled by buyers or mostly controlled by sellers. AMD obviously breaking below that 50-day moving average last week changes things. We were very much bullish on AMD, but now that it's below it, we are starting to turn our position a little bit. Now, AMD needs to recover above 172.80 as quick as possible, and it also needs to move back above that 50-day moving average, which is right around 181.50. The moment it's back above that level, there's a good chance that buyers will regain full control and move it back up again. But for now, it seems like buyers are trying to shake people out of semiconductors. Semiconductors like AMD, Nvidia, Taiwan Semiconductor, these companies have been dominating the market and they have been needing to come down. And now is a time in which we're seeing profit taking, but it doesn't look like they're fully reversing just yet. And we'll talk about Nvidia in just a little bit to show you why. But for AMD in specific, for now, things are a little rocky, but we are still expecting the stock to recover. And the moment that semiconductors get a little bit of bullishness in them, AMD in specific will be back above 200. So we consider a longer term position on AMD right now, maybe multiple months out. Generally, we are bullish on the stock, but the short term is looking a little bearish. The next stock on our watches is going to be Nvidia, which, like AMD, broke a very significant support last week. Now, this is not the 50-day moving average that it broke, but it broke the 10 and 20-day moving averages, which haven't been broken since January of this year. You can see that Nvidia has managed to defend that 10 and 20-day moving average over and over again. And on Thursday and Friday of last week, it came down significantly below those levels. Now, here are some shorter term levels to watch for on Nvidia. We are still very much bullish on this stock, even though it broke below the 10 and 20-day moving averages. In fact, we have been holding a position on Nvidia since below 500 in our group. On Nvidia in specific, for the short term, we just needed to defend 831. If it defends that level, it is in the strongest possible territory, and we do expect it to move back up. Resistance in the way is going to be 932.40, but ultimately the stock needs to break above 975 in order for it to continue its rally towards our 1200 price target. To the downside, we see Nvidia has a support at 831, and the only time we would start turning a little bearish on Nvidia is if it breaks below 770, because at that point it can easily fill this gap down towards 675. The next stock on our watches is going to be Meta, which successfully made another new 52-week high and a new all-time high last week, despite the fact that the rest of the market sold off. Now, Meta is one of the strongest companies right now on the market, and we have a resistance placed on it at 530.70, which was the highest point that it reached last week before it got rejected. Above that level, the stock has a blue sky breakout, but just keep in mind that if the market sells off again this week, it likely will drag down Meta with it, and the first support we have in place is going to be 510. Below 510, Meta doesn't really have a support. You can argue that maybe it has a support around 502, but nonetheless, we don't really see much support below that level, so it can easily free fall towards that 475 to 480 mark, which would make a good put position, and we may take that in our group with our members. The last and final stock on our watches, like Meta, also made another new 52-week high last week, and this is going to be Amazon. Here are some levels to watch for on Amazon. If you are looking at it on a bullish trend, Amazon may come down to retest that trend line this week. You can see that it has fought that trend line over and over again. Buyers have done a good job of making higher highs and higher lows. But this week, it may retest that trend line once again. If it breaks below it, then Amazon will likely follow the market down. If it defends it and pushes back up to retest 186.30, buyers are going to need a breakout above that level to move to the next price target of around 188. And so that's all we have for you guys on our video update this week. I hope you guys enjoyed this video. Make sure you subscribe and like.